Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Nathan Hager, joined by Bloomberg's Dan Curtis on a kind of quiet morning more broadly, Dan. But man, some big moves in individual stocks, including a big name in nuclear power. Look at the rally in Oklo this morning. Good morning, Dan.
Good morning. That's right. Shares of Oklo are up nearly 20% in the pre-market. This is off the back of Reuters reporting that President Trump will sign an executive order to jumpstart the nuclear industry today. That's according to sources. The president's goal is to ease regulatory approval process and strengthen nuclear fuel supply chains. Literally powering tech's growth is a focus under this presidency. If you go back to January, day one in office, Trump declared a national energy emergency. This has put a lot of optimism into these small nuclear reactor companies. Oklo, NuScale Power, Nano Nuclear, all up nearly 20%. These are the types of companies that can put a small nuclear reactor at data centers and drive the energy straight to the AI space.
Yeah, so playing into that AI trade as well. Very interesting move there. Also got some stocks on the move following earnings. Let's start with Intuit, shall we?
That's right. If you use this company to file your taxes last month, you'll be familiar with it.
Yes.
Super important quarter for it. The quarter ends April 30th, so it captures that tax filing day, and the company blew it out of the water. Revenue was 2% higher than estimates. Earnings per share topped expectations by 6%. The company came out and said that full year earnings will be over $20 a share. Their last guidance was $19, a little bit above $19. So they're pushing ahead to a strong year as they expand out their tax filing services.
So a good quarter for e-tax preparers, maybe less so for some more traditional retailers. Start us off with the latest earnings from Deckers.
That's right. So this is a footwear company. If you're fashionable, you might be wearing Uggs. If you're closer to someone like me, you'll be wearing their running shoes, Hokas. Company posted fourth quarter earnings. While the earnings and revenue figures were pretty good, the guidance for this current quarter fell short of expectations. Management is not providing guidance for the full year. They say that's due to uncertainty around global trade policies, which is also known as tariffs. In the wake of this, some Wall Street firms are cutting their recommendations. Evercore ISI seeing signs of declining growth in both Hoka and Uggs. This follows in the wake of their competitor On Holding posting strong outlook earlier this month. Stock is down nearly 18% in the pre-market right now.
Wow, and it looks like we're getting a similar story as far as the earnings go for ROST Stores, the low-cost retailer.
Exactly. So low-cost retailer, well, they do not buy directly from China. They buy from other companies that import from China. So this means about 50% of their goods originate in China and are subject to tariff impacts. The stock is down 12% after the company reported earnings last night. It sees about 10% lower earnings this quarter just due to those tariffs. The stock did close up on the year yesterday, but it's looking to erase those 2025 gains when it opens in just a few hours.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.